Hey folks, here's another options challenge update. This is for week 51 of this year, and we have one more week left after this. Looking at the daily chart here, you can see a lot happened this week. In my previous video last weekend, I mentioned that Monday, December 18th, would be a pretty important deciding day, because if Monday is green, then it's likely the uptrend will continue and will end the week higher. But if Monday closes red, then this candle back here last Thursday would have been the high for the time being. And it looked like Monday was up about 0.5%. So it did play out that the rest of the week the market did trend up, and the green line, which is the 9-day exponential moving average, held as support as the market bounced off of that and continues to trend higher. So on Monday, I made $45. I kept most of the trades fairly conservative because it was hard to gauge which way the market was going to go. On Tuesday, I got more confident, put in mostly bullish trades, like my bull put spreads over here, and I made $70. Wednesday was pretty hard to make money as an option seller because you can see the volatility that day, this huge red candle. If I go to the 5-minute chart, this is Wednesday right here. You can see it was pretty boring most of the day, and then all of a sudden at like 2:30 it just started to drop quite violently. So I was able to get out of my positions for a loss. You can see in the morning I was bullish, so I had my bull put here, 2 of them, and I made $38 each. But of course, later on in the day, I had to get out of my 2 positions, so I sold them, and it costed me $65 and $84, so I lost money there. However, I was able to sell a couple of calls with a strike of 475 at around 2 p.m., so around here where this red candle is. And of course, the market finished way below 475 that day, down here at 468. So my 475 calls expired out of the money, and I was able to make $48 times 2 without having to close those. So luckily, I was able to follow the price action and change when the market did. First, it went up, and then it went down. You can see how much money I would have lost if I held onto my initial bullish positions. Instead of closing my bull puts at 68 and 84, they would have been $1 each. So that would have been significantly more. And then Thursday, I made $242 because of this pretty bullish trade over here where I sold a bull put spread expiring the next day, which is Friday. And the reason I was bullish on the market was because if we look at Thursday here, you can see the market chopped through most of the day. It started here, it went up high, low, but then it came back up and it surpassed the previous high for the day and ended the day higher. So that was a sign that next day, Friday, is going to be pretty bullish. So that's why I put in those trades. And if I had been wrong, then I would just close out my position. I actually ended up closing a couple of my bull put spreads on Friday, but I left the remaining ones and they expired out of the money. And then Friday, which is today, I made $102. Lots of trades, but a lot of them were very out of the money single options that was highly expected to expire out of the money. Like I sold a 476 call and a 477 call. Did not make too much money from those, but the deltas for those were quite low. So the market is now closed. It's 5:38 Pacific. Monday for next week, 25th, is a holiday. So the market is closed on Christmas, but it'll reopen on the 26th. And the only options I have carrying over to next week are these two. I am short the 474 call and the 475 call. I'm making money on these both so far, but we'll see by the end of the day on Tuesday how these are doing. It is currently 473.13, which means so far these are out of the money. But if it goes up a little bit, I might just roll these to like Wednesday or Thursday. Everything else that is expiring today are, as you can see, expiring with 0 market value, so they are all out of the money. In terms of combos, this is the one I put on yesterday on Thursday. I put on 4 of these and I sold a couple. You can see I took a loss there, but in the end I made back $85. So that's a $65 net profit. And if I go back to the daily chart, let's talk about next week, which is a little bit difficult to say because we are in this chopping pattern, but at least for Monday, I am leaning towards it's going to be a red day. One reason is because we are on this uptrend with the 9 EMA, this green line, and we have a red candle with a longer bottom wick than a top wick, and historically there's a 60% chance that the next day is going to close red. The other reason is because if we look at the 5-minute chart for the SPY, We started the day pretty bullish. It went up, but then it slid down. And when it tried to come up, it did not go higher than the previous high. So if it can't go higher, then there's a good chance it's going to try to drop lower, which it did. It took out the previous support and it landed all the way down here before bouncing up. But again, the bounce wasn't very strong and it wasn't as high as the previous two high points. And when we take a look at the MACD and the RSI, these momentum indicators also confirm that the first high point in the day was the strongest point. All the other ones that came after, like the second bump and then the third bump, were both consecutively lower. Now contrast this with Thursday, which is over here. You can see the market made a high, it came down, but then by the end of the day, it not only came up and surpassed the previous high with the price action, but also on the MACD and the RSI. Both went to the highest point of the day. The RSI crossed over to overbought territory. So that's a signal that for the next day, the market probably wants to open higher. But since we didn't get that kind of setup on Friday today, I am leaning towards a lower close, but because it's a holiday coming up and it's a 3-day weekend, it's kind of hard to say. But in any case, I think the market is reaching a topping point. So either it'll go up a little bit more and then drop down and retest the 21 EMA, this blue line, because it hasn't touched it in a long time since early November. Or this would have been the high up here on Tuesday at 474.8. And next week, we're going to start trending downwards. But I don't think we're going to have another run up like this anytime soon, because when you look at the RSI on this daily chart, there was a high over here in the oversold category, and then it went down with the market. And when it came up again, it did not go as high as before. So this RSI peak is lower than the previous peak. But when you look at the price of the SPY, it actually went higher. So when this relative strength indicator line is going down, but the price of the ETF is going up, you have divergence. And it just means that the momentum does not support higher prices. And if the RSI starts going down again from here, then that means this high is not as high as the previous high, which is another indication that buying momentum is slowing down. So the market should sell off after that in most cases. So for this week, I made $474. The SPY went up 0.92%. And here's what the graph looks like. That's going to do it for now. I'm looking forward to the final week of this SPY options challenge. Even if I mess up really badly, I should still be able to beat the SPY. So I'll just keep doing this for 1 week and see what the final result is. Thanks a lot for watching, and I'll talk to you in the next one.